Here we are starting a new year and going to just briefly review all of the positions that we're in and probably start something new. So let's get started. So here we are in a new year, just looking at the dashboard to just reflect on the previous year. And previous year we brought in about $5,200 in overall premium, minus what our realized gain loss. I mean, we actually collected about $7,000 in credits, but we have to deduct the realized loss that we experienced, and so the total premium brought in was about 5,200. So that's not too bad. And then if you want to see the month by month breakout, we actually just started this portfolio in July, so it's actually only represents about a half a year. And as you can see, it was a slow start, and then it started jumping up to about 1,500 ish every month. And December was not looking like it was going to hit that high, but here in the last couple weeks, basically converted a bunch of them over to long term or longer term premiums because the weeklies were just not paying anything. So I did extend them out by several months for some of the positions, which brought in a lot more premium, at least up front. So in any case, and we're also in a transition period where I'm moving all the money out of Robinhood. So as you can see, I finally have cleared all of my positions. I did leave two small positions. They're just dividend paying stocks that are going to stay in there. And so that's staying there. So I got about $2,000 left to pull out of there and then move. I was moving them all over to Ameritrade, and I'll show you that in just a second. So here we are in Ameritrade, and I had started moving them over there little by little by putting puts and then transitions the entire stock by selling them in Robinhood and then buying them over here in Ameritrade. But what I had run into is they weren't allowing me to do some of the option strategies that I wanted to start partaking in. Some of the more doing like spreads and iron condors and things like that. And I didn't answer their magic question list correctly, so they denied me initially. But then I also had to switch it over to a margin count again because I'm not a really big fan of margin. So I was trying to stick to the cash account, but turns out you have to have the margin account in order to get any of the access to like spreads and stuff like that. So I did start looking around. I had been eyeballing Tastyworks for a long time and never really gave them a shot, but due to that fact, and then I had to wait for Ameritrade to get back to me on that. And I did apply for the margin account and got that activated again. I haven't retried to get the upper option levels to where they'll let me trade spreads yet or not, but it's kind of funny because in the meantime I did go over to Tastyworks, and they have me full access over there, and turns out I think I like them better because just some of the visualizations and the organization of the trades and the stocks I like better. They do group them right here, which is very similar to what Thinkorswim is doing here. But I don't know. It just it rings better with me over there. So I think I'm going to give Tastyworks a try. I'm going to leave a couple positions open over in Ameritrade just to keep it going because there are a few things that I do like better about Thinkorswim. I mean, let's be honest, it's a power tool for power traders, and you can really get a lot of detail in here. One of the biggest things that I actually use a lot is this filtering by the strike price. When you're looking at the option chain, it really helps to be able to see across all of the different strike price. So like here, I was looking for a 50-cent one, I think on Clove, because I was trying to do a cash secured put, and it really helps to filter down to just the strike price you're looking at, 50 cent. I'm looking for a 50-cent one, and then expand all of the expirations so you can actually see right down the line which one's paying, which one's not. And as you can see on here, I mean, I'd have to go clear out to May 19th to actually get any kind of premium, and that's 137 days away. So I mean, this was one of my smallest positions, the smallest obviously last price. So kind of want to just get out of this one and move on to bigger fish. I am negative on this position, and I can jump over to application to show you that real quick. But in any case, long story short, I'm moving from Robinhood and Ameritrade and just going to consolidate the bulk of this main portfolio for demoing the myatmm.com's web application to demo the usage of that application. I'm just going to consolidate them all over in Tastyworks for that purpose. And so yeah, one thing I am going to start doing though, due to kind of the brick road or the brick wall running into the premiums on this, because a lot of them, I mean, they don't expire. Let's see, do I have yeah, we have the days to expiration. So we do have some 7s and 14s, 21s coming up, but they're definitely not close to being weekly. Some of these, see, they're 140 days out, so won't be much to show on those in the near term. So what I am going to do is I'm going to, I have a paper trading account with Thinkorswim as well, and the paper trading account I think would work quite a bit better, especially if anybody's following along. You can actually just put these trades into the paper trading account, you know, and do it risk-free over there. So it might work a lot better, and I might actually bring some of the more advanced option trading strategies that I've been trying to do lately, iron condors and spreads, and I might do those in that account as well to basically just demo not only doing the strategy, but how you can utilize the application to track those expenses and then track your overall cost basis over time, over, you know, many trades on the same ticker symbol. So here we are over in Ameritrade, the paper trading account. In I guess the margin account, I've been doing some iron condors over here that have actually been working out really well. As you can see, we're up about 500 since the open of these, and I had a couple other ones that have already expired and closed out. So you can see, I mean, this one's up 500, but overall I'm up about $2,400 since I reset this prior to doing those other positions. So in any case, yeah, these are some iron condors, and I'll probably be moving these over into the real portfolio at some point in the future. But what I want to do is I want to go ahead and just start fresh, new, just starting with just a single stock, doing the wheel strategy, the MyATMM way, where we just continually roll from cash secured puts until it's filled and assigned, and then start selling covered calls on them, while I'm also playing the other side on the puts to dollar cost average if the stock goes down in price, and all the while using the website to track that position and track the cost basis in there, and just do that in a demo account to show you how to use the web application while, you know, selling options and buying stock in your brokerage of choice. So now just need to look for a stock ticker symbol to do this too. So here we are at myatmm.com. We're on the covered calls cash secured puts analysis page, and I'm just I like using this screen to try and find a new stock to just start trading this wheel strategy on, just as a demo in the paper trading account. So I'm going to go ahead and filter down to just the dividend paying stocks, just because sometimes that likes to try and hold the price, because when a stock price goes down on a dividend paying stock, the yield goes up, which starts making it more attractive to buyers. So it's just a personal opinion that I believe that dividend paying stocks have a more probable cause to stay elevated, or I should say not stay elevated, but stick to a price range. Because, I mean, if they just drop off a cliff, granted, you know, I mean, the business could be tanking and that may not hold true, but I think generally speaking, all things being equal, dividend paying stock would probably tend to hold its value better than a non-dividend paying stock. Again, just my opinion. Who knows if there's any truth to that or not. So anyway, I filtered down the dividend paying stocks, and also you probably noticed I think there was let me go ahead and go back real quick. But there were 535 total stocks that I'm tracking currently, and you can add and remove as you wish here. Um, but in any case, when I filter down to just the dividend ones, it cut it in half. So again, we're just trying to filter down and isolate a specific stock that we want to deal with, just for this demo trade account. So also, let's see. I definitely don't want to be dealing with any dollar paying stocks or $2 stocks. So let's go and put a min price of $10. So anything above $10. So it's going from 244 to 231. So that's not much cut off the top. And just for our purposes, I don't want to pay. I don't want to deal with anything over, I guess, $80. Want to stay away from the $100 stocks, just because doing this strategy on it, you have to have enough capital to continue churning, playing the puts and the calls, so you can continually dollar cost average on the stock. So you want to try and keep the capital available to do that with, and it cut the record count about half there as well. Okay. So what else can we filter down by? The min bid price. I like doing this because sometimes the lower paying dividend or lower paying bid prices generally kind of give you an indication of how much premium is really available on a week to week basis on this. And right now I'm only showing week one. So let's give us enough, a little bit more real estate so we can collapse that. And I'm going to show both, which will show week one and week two out for this specific ticker. So the bids on here, see, these are $1.95 bids. These are 16-cent bids. Let me just sort by this column. So yeah, see, we got some zeros and we got some really low ones. So those are not, in my opinion, good ones to target. So I'm going to go ahead and filter down to 20 cent. The minimum bid has to be above 20 cents in order to get in here. So we're at 117. Let's see what this filters it down to. 91. Okay, we're getting a little bit better now. See, so now they're all starting at 20 cents. And that's for the week one for this ticker, and that's week two. So when I say week one and week two, I also mean the next expiration. This is focusing on stocks that trade weekly options. So it's the next two weekly options. So the first week is paying 20 cents. The next week out is paying 50 cents from today's date. All right. And also, something else that I like to do is the minimum volume. As you can see, the volume is pretty low on this, and it really is a matter of the open interest. But just on a daily basis, daily volume, it's kind of nice to see. So this one's only 2. So the minimum volume, we want options to be liquid. So this is just the number I throw out. You might have a different number in your mind. I like to stick with 50. So anything above 50 daily, and it will check all 4 of these. So all 4 of these have to be above 50 in order to keep this stock ticker in the list. So let's see if there's any of those available. So there's 91 right now. That filtered it. Okay, well, there's quite a few. It filtered it down to 82. And actually, so that was not true. See, look, minimum volume. Okay, my apology. It actually looks for at least one of these to have greater than that minimum volume. So since the put volume 1 and the call volume 1 had more than 50, it kept them. So it's not all inclusive. Okay. All right. So we got all of our filters going here. So now we can actually start just sorting by these columns if we wanted to look for the ones that were paying the best ROI, and we're actually looking for a cash secured put. So I'm going to keep the calls up because you like to see the calls have a premium as well as the put side. So let's go here. So the put week 1 ROI. Okay, so the highest one is 133, and that's just an annualized ROI it's showing here. So 95 cents on Marvell. Let's see, so 75 cents. So it's a $37 stock. Yeah, I think we could probably just try this one for demo purposes. The weekly average is 3. And look at the volumes, 309, 489. See, high volumes too. So I'm liking this. And the premiums, week 1 and week 2 is paying close to $1 or over $1. This one looks good. It's dividend. It has a really low dividend yield though. but we're not doing these for the dividends. We're really just utilizing the dividend paying aspect of it as a like a fundamental kind of an analysis or a fundamental property of this stock. So in any case, let's go ahead and stick with Marvell and see what we can find over in Thinkorswim. All right, so here we are back in Thinkorswim. We're going to go ahead and enter the ticker symbol Marvell. And I just like to look at the chart just to get a, bullseye or a bird's eye view of the stock. So Marvell, and I like to look at the 1 day for the past year. So it's definitely looks like it's in a downtrend. So the low's 35. We're going to go ahead and stick with this one. Stick with this actually. Let's look at the earnings. So the dividend's been paying 6 cents. The earnings seem like they're okay. The actual's been more than estimated. So anyway, now here's another thing. It looks like the earnings is coming up. No, sorry, the dividend. Okay, the dividend is coming up. So that is something to be mindful of when you're trading cash secured puts. Let's expand this out a little bit. So the dividend pays on 1/5/23, or I guess that's the X date. So January 5th. So that is this week. So that is something to be mindful of, but we're going to ignore it and continue going with it. The only time that really matters is if you, again, this is opinionated, but is if you own the stock when you're in fear of losing the stock. But we don't own the stock yet. We're actually just looking to sell a cash secured put on it to buy it. So if anything, I don't think that's going to really mess with us at all. I mean, we're clearly not going to get the dividend on it by selling a cash secured put because we won't own any shares as of the X date. So in any case, let's go ahead and go to analyze, and let's collapse all of these. We're looking for, should I do it for just this week or should I push it out this? Let's find out what the near the money premiums are going for before I make that decision. All right, so a put, so it's currently trading at 37.04. So selling a put here would get us about 100, and selling it out here 11 days later would get us 156. So, I mean, that's like 200 weekly, and that's for 4 days. So, I mean, I'd almost say let's do this one. And we're demoing this, so we're going to go ahead and do this one. And again, the market's closed today because of New Year observation. So this won't actually execute till tomorrow morning, and we may not get the 95. We may have to lower it. So we're going to go ahead and put this order in, and the mid, it's only 3 cents. We might be able to get 6.96 for it because it's 3 pennies. We're going to go up a penny. So I'm going to go ahead and click confirm and send on this one. We should get a credit. Oh, and the default in this is 10 contracts. So let's back up on that because we're trying to keep this realistic for a normal starting portfolio. We're going to stick to 1 contract and not 10 at a time. Even though this balance does have 100 grand, so we could theoretically do it in this demo account, but I'm going to stick to more realistic for the general audience's portfolio size. All right, so confirm and send. So we'll get $95 in credit here. Yep. So let's go ahead and send that. All right, and so now that order is in play, and if it fires off tomorrow, we will come back and go into the application and retain this. So basically, I can go ahead and go over to the application and get into the demo account and set this up to prep it for when we do get to it. So let's go and get that started. So here we are over in the demo account. You can see I already have some ticker symbols where I was doing some demos for other ticker symbols. Over here, Marvell does not exist over here, so let's go ahead and add it. so we can just have that in this account as well. All right, so I added it and it's showing up right there. And also if I wanted to filter down to just that one, I could hit the symbol there and then it'll filter down just to that one. All right, next thing to prep this, we would want to come over here and, all right, yeah, see, so the demo account only allows 3, so I cannot add any more in the demo account right now. So let's see if we can go fix that real quick. All right, I made a couple adjustments, and so now we can go ahead and click add and type in the symbol that we want to add and click save. And so now we have Marvell saved as a ticker symbol in our cost basis. And now tomorrow when that executes, we should be able to come in here and add a new position to represent that cash secured put. And we will do that tomorrow for the appropriate price, and then go into more detail on what to look for next. So I want to thank you for watching. Like and subscribe if you haven't already. And if you haven't already gotten your free account, go out to myatmm.com and do that today. And you can start tracking your cost basis on ticker symbols you trade as well. Thanks, and I'll see you in the next one.